Data out on housing today. Home prices hitting an all-time high in December, according to Case-Shiller, up 6.1% year over year in 20 major metro markets. That's despite the rising cost of mortgage financing. And with housing affordability near an all-time low, approximately 40 to 50% of Americans who take out mortgages need to purchase mortgage insurance. That occurs when you put down less than 20% in the down payment when purchasing a home. Joining us now, Rohit Gupta. He is the CEO of Enact, one of the leading mortgage insurance companies with a front row seat to what's happening in real time in the housing market. It's great to have you on the show, and that's exactly where I want to start with you because, yes, mortgage rates are so much higher than they were 2 years ago. It's stymied sales, and yet we're at record highs in major markets across the country for home prices. How would you assess the housing market and where this goes from here in 2024?
Sure, Morgan. Thank you for having me. I would say the view you captured in terms of affordability is what we are seeing in the market. Affordability was at an all-time high, I would say, in the middle of 2020 when interest rates were low and also home prices had not increased. But since that time, we have actually seen mortgage rates more than double, right now close to 7% for a 30-year fixed mortgage. And at the same time, we saw significant home price appreciation in 2020 and 2021. So Housing Affordability Index, which is something National Association of Realtor uses, is actually down almost to half the level where it used to be in middle of 2020. But on the other hand, you see what you saw this morning, both from Case-Shiller and Federal Housing Finance Agency in terms of home price increases of 5 to 6%, because we have a low supply, low inventory of single-family homes in the market. It's sitting at about 3 months, and our normal is 4 to 5 months. And at the same time, we actually have suppressed demand. So while the demand is low because of affordability taking a hit, we actually are seeing a balance between that supply and demand that is giving us a home price increase of 5 to 6% annually.
All right. As we await rate cuts from the Fed at some point, perhaps later this year, we know first-time home buyers have really been pushed out of this market because of the affordability dynamics here. 60% of first-time home buyers that use mortgages don't pull the full 20% down. What do you see in terms of that piece of the market? What is it going to take to unlock it?
Yeah, Morgan, you're absolutely right. And as a leading private mortgage insurance company, that's our mission. We help homeowners get into homes when they do not have 20% down payment. And we have been doing that for the last 40 years. And as you said, when we were kicking off this segment, that 40 to 50% of consumers who use a mortgage to buy a home during good times or during difficult times actually do not bring 20% down payment. So it's a pretty big segment of the market. We basically see first-time homebuyers still being very interested in buying homes. And think about first-time homebuyers. While they think of mortgage rates, the most important thing that they focus on is their monthly payment. So they're very interested in buying a home, but they're waiting for that rate drop. So just to give you a magnitude, a rough estimate, if mortgage rates were to drop by a point right now, it would improve affordability by 10%. To get the same benefit from home price reduction or wage increase,